Signs of bull markets.
August marked 3 straight months of all-time highs in the US and Canadian equity markets. Materials led the way in the US, and it's not just from the gold strength, but also from industrial chemicals. These tend to be cyclical, and that's potentially a sign of sector breadth is expanding. And we see this also flowing across other segments in the industrials, including HIND, our industrials income ETF. And we do see that expanding breadth as healthy for the broader markets. Of course, markets don't correct or bottom on valuations, and in healthcare, we've been in search for a catalyst given the cheap valuations. In August, Warren Buffett announced he was adding to the sector, and that inspired some reprieve for the overall healthcare sector and was the second best performing on the month. Last on markets, not that we're keeping score, but the TSX at the end of August has now outpaced the S&P 500 over the past 5 years. And yes, while some gold stocks like Agnico have performed very well, we have seen strong breadth across the large cap Canadian markets.
New innovations for Canadian blue chips.
Harvest crossed $2.5 billion raised in our US high income single stock ETF suite during the month of August, and we're delighted on the back of that to have launched the Canadian high income shares. These own individual large cap Canadian stocks in an ETF with covered calls to generate monthly income. For those looking to add to their individual securities and generate high monthly distribution with modest leverage, we now have 10 individual Canadian stocks to choose from. And with the launch of HHIC, a diversified one-ticket solution to own all 10 of those stocks. Of course, key drivers for many of these companies will come in the next coming months as we look at key macro events leading into the seasonally more volatile September period.
The Fed primer.
Given media headlines of Fed independence, quick primer on the Fed and its implications. The Federal Reserve sets overnight rates, which ripple into longer-term bond yields through inflation and growth expectations. It's run by 7 governors that are appointed by the president with staggered 14-year terms, and that's really to minimize stacking of the board. All 7 of the governors vote on rates. There are then 12 regional bank presidents, 5 of which vote on a rotation period on rates. All 12 presidents are up for renewal this February, and that's why it's so topical in the media, especially given a governor's retirement and a potential dismissal around Governor Cook could shift the voting power and raises concerns about potentially some political influence. Even though some safeguards remain, this type of perception of independence does leave the market unsettled. On the back of this, there has been an increase expectations for rate cuts on the back of weaker job data and some of the political pressure. But this has also served to push longer-term yields higher as investors priced in inflation risks and Fed uncertainty. So, although option premiums remain elevated on long bond ETFs like TLT, the shorter-term gyration of bond prices has been a challenging environment, and mid-duration bond prices have remained steadier. And despite these upward moves in yield in August, we expect they will be data dependent and will have some gyrations as we see data coming in through September. Uncertainty around the Fed policy, though, has boosted gold and benefited our HGGG. And of course, coming into September 17th, both the Fed and Bank of Canada are set to determine rates, and we see likely gyrations across the markets around headlines as we await additional jobs data and inflation data later in the month. And of course, that's ahead of Q3 earnings season, which we think margins are going to be the key focus this quarter.
New ETFs and new insights.
We also launched during the month a preliminary prospectus for 5 new high income shares that we anticipate trading later in September. Also keep an eye out for some of our US dollar class updates. For those that haven't seen our monthly high income shares commentary, we have included expanded insights into where funds are flowing, various option metrics, and also some more granular commentary on the individual names. Lastly, we've had several pieces out over the course of the month, healthcare and catalyst diversity at a time of uncertainty. But the one that I'd really highlight, it's a white paper entitled The Skinny, a history and outlook on the GLP drug class. It's really fascinating. We'll undoubtedly see pockets of volatility, and with some valuation gaps widening, we continue to believe layering in some defensive exposure and diversity remains key as we navigate the upcoming earnings season in October.
Subscribe to Harvest ETF's Insights. Join us and stay informed.